We're going to try and stay positive after lots and lots of these videos being a little bit about negative stuff. So here we've got it, biggest sign yet of turning point in the economy. And so let's get away from all the trashiness and across to what this story is talking about. It says the Australian economy is showing signs of life. So I thought, we've heard all the news about interest rates and cost of living and all that type of stuff, inflation that has been very, very negative throughout 2024. And given we're getting close to the last of these weekly wisdom videos for the year, I wanted to stay as positive as we could, particularly given that this week, this lady here, the head of the Reserve Bank, came out and kept interest rates on hold despite many people, commentators in particular, who suggested that the RBA needed to act and act quickly to avoid the economy going into the dreaded R word. And so they didn't heed any of those warnings and kept interest rates on hold. So looking to see what positive news can we find in the economy, and here it is, of all places, it's come from the chief financial officers. And as a former chief financial officer, it makes my heart sing when I hear them giving a positive thumbs up about the direction of the Australian economy. And I'll explain to you shortly why this particular measure is relevant and important to you and your money and investing into 2025. So it says here, the men who hold the purse strings, and the women, of course, at Australia's biggest businesses say the economy is improving and are the most optimistic about the future since COVID. So what does that mean? Well, it means the chief financial officers have been surveyed, and effectively they are saying that the confidence in the economy has surged 12 points in the 6 months to record a positive reading for the first time since 2022. And fears about the Australian economy has slipped to the fifth most important thing when it comes to the CFOs of big business. And what that means is they are confident, as it says in here. I won't go on about the stuff that they're fearing because it's not as important, but what they're saying is they can see better times ahead for business. And what that means, if business is confident, it means they're investing in growth. And what that then means is profitability, and profitability leads to growth in the stock market. And so to hear that the CFOs are more confident since than they've been since COVID is a really positive sign, as much as it may not have been intended to be in this way, but it's a positive sign that things are looking good for the Aussie stock market in 2025. Now, there's no promises, there's no guarantees, because who knows, the CFOs could be completely wrong. But normally speaking, if a CFO is ranking the economy more positively, then there's normally a reason for that, and that will be reflected in the numbers that they're seeing on their desk, on their screens each and every day. And that's great news for the Aussie economy and therefore the stock market. What does that mean for interest rates? Well, we really don't know. Depending on which media you listen to, interest rate cuts are coming in 2025, somewhere between February and December. And I say that facetiously, obviously, because that's the only time that the RBA is meeting in 2025, somewhere between February and December. But there's all types of predictions out there. Nobody really has a real strong finger on when they're going to do it. But there are many metrics lining up to suggest that if they don't pull the trigger soon, it could be detrimental to the Australian economy. So we've got the CFOs on the one hand saying things are looking pretty good. We've got the RBA on the other hand saying, we just need to hold fire, we need to hold fire, and we just never know when that's going to transpire. Having said all of that, we've got a lot of things happening. I mean, I haven't gone through all of this article because a lot of it's talking about unrelated stuff to your money and your wealth. But what's not in this article, but is part of some of the research I've been doing this week, because if you have been following along, you'll know that the Australian and the US stock markets have been rising quite dramatically this year, 20 odd percent for the Australian market, 30+% for the US market. And we're at all-time highs or thereabouts in both markets. And so there's a lot of joy about that, but there's also a lot of trepidation. A lot of conversations I've been having with clients is about, well, you know, the stock market's an all-time high. I'm really worried about investing at these levels. So I thought the only way really to allay those fears is with some data. And I went and did some research, and the great thing about this research was, we were talking about, the piece of research I found was related to the US stock market, but as we all know, the Aussie market tends to follow their market predominantly. And off the back of this survey and this report, you know, we should see more of that in 2025. But what this report was saying is that after a market has had a year where it's grown like it has in the last 12 months, so like around that 20 to 30% rise, what happens? Because obviously a lot of people are thinking, well, it can't keep going up at that rate. And the research kind of supports that fact that it can't keep going up at 20 and 30% per annum, despite what Mr. Trump might want you to believe in the US. Sorry to say, but you're not going to see another 30% uplift next year in the US stock market. It's just not going to happen. But what the research does say, and this is for those people out there who are scared about investing at today's levels, what the research says is that on average, the market after a year like this, the following year on average grows by 13%. So we know over the long term, a 10-year period, stock markets grow at 8 to 12%. And so after a year like we've just had, we're still going to get a slightly higher than average growth next year. Now, again, no guarantees. These things are averages, and they're, you know, nothing is set in stone, and we don't know what's going to happen with the change in the government in the US and what that might lead to. But if history is anything to go by, investing today at these near all-time high prices won't disappoint you in 12 months' time when it's added another 13%. And so that is, you know, the only and best way I can think of to help allay those fears about investing in the stock market after such a great year is to see what it's done previously. And the good news is that it's done reasonably well. The other thing that's come up a lot in recent weeks, and I'm just doing a slight deviation here away from this report, but the other thing that's come up a lot is the question about Warren Buffett. And as you know, I'm a big fan of his. And a lot of people have been asking about the fact that he has been he's been getting headlines for the amount of selling he's been doing and cash that he's been stockpiling. But what hasn't got as much news is the spending he's also been doing. And one of the big positions he took out in the last few weeks is in Domino's Pizza, which didn't get the same level of news as what did his sale of his Apple stock. But there you have it. If Warren Buffett is still investing, then I think everybody else should be doing the same. And I think that every day of the week, whether Warren Buffett's buying or selling, you know, he is a guru. He is my favorite person to follow when it comes to stock investing. But just because he's selling stocks doesn't mean he thinks necessarily that the market is going to do anything silly, despite what a lot of people are thinking about reasons why he might be selling. So as I said, I wanted to keep this weekly wisdom video positive. We've got the CFOs of Australia's big businesses suggesting that the economy is showing signs of life, and that is good for 2020-25, for profits of small business, medium-sized businesses, even big businesses. And if they're all making profits, that's good for our stock market as well. And that is why I went off and did the research to say, well, how much higher can this market go? And the data suggests on average it could go another 13%. So the last thing you want to do is be on the sidelines watching the market do that and not being a part of it. So that is all good news, and something that I think I encourage you to heed when it comes to your investing strategy into 2025 and even in the balance of this year. Still waiting to see whether or not we get the Santa Claus rally. It's been a little bit up and down over the last week or so, so it hasn't really happened yet, but maybe we already had it throughout the whole year. And this year will be a little bit more subdued because we've had such a great year in the markets. The markets don't need a big rush at the end of the year to be able to report how good 2024 was. Unlike 2023, when we had a massive Christmas rally because of the big drop that occurred in October last year. And so they needed a Santa rally to produce some positive numbers for their brochures into this year. But this year's been so good, I think the chances of a strong Santa rally are less likely. We'll probably limp into the end of the year at and around the levels we're at now, because the year has been an absolute bonza. So they're my thoughts. I hope that they are helpful. Would love to hear your comments. If you're watching on YouTube, hit the subscribe button and the little bell to get notified when these videos come out. If you're watching on Facebook or LinkedIn, hit the like button. Leave us a comment, even if the comment's just a little thumbs up. And if you really want to help us out, hit the share button and let your network see what we're talking about, so we can spread the financial literacy message to more and more people. So that's Woody's Weekly Wisdom, episode number 78. Have a great week, and we'll see you again next week for the last weekly wisdom video of 2024. Cheers.